So we all know about the troubles facing Greece and the Greek deficit and the pressure on the euro, the currency falling to 136, 137 against the U.S. dollar. What's next for the euro and Greece? Let's find out more. We have Mark Dow of Pharo Asset Management. Good to have you with us, Mark. Thanks for coming in.
Thanks for having me.
Now, I know you've been long the dollar for a while now. Did you see this coming? Did someone tell you something?
Well, we've been long the dollar, and we've also been short Greece for a few months. We thought it was time that this story start taking hold. And really the catalyst that brought it to people's attention was Dubai. It reminded us that there are pockets of deleveraging that has to take place all over the world. And Southern Europe is no exception.
And so do you expect this to continue? I mean, is this really that big of a deal? Because it seems as though if you take a look at the Greek economy, what are we talking about? 2.5% to maybe 3% of the total EU land economy.
Right. It's in and of itself, it's not tragic. But if it were to spread to other countries, and a lot of other countries in the area have similar characteristics, perhaps not as bad as Greece, but similar. They have poor growth, poor demographics, high debt, and brittle political systems that are resistant to reforms. So if it were to spread much beyond Greece, it could get very serious and have systemic implications. A lot will depend on how the government...
Do you expect that to happen?
It really depends on, it's highly path dependent. It will depend on the policy response. It needs to be quick and it needs to be forceful. They've agreed now in Europe that they need to do something, but they don't know how the burden is going to be shared and exactly what form it's going to take. Because there are two things that we have to, the two asset classes that have been free of credit risk, or at least that has been the investor perception for about the last 10 years. One has been European government credit. The other has been municipals. We've just assumed away the credit risk. Because of the deleveraging process, these credit risks are coming back, and we're going to have to face up to them.
But it seems as though, at least from the European Central Bank perspective, they were pretty sanguine about what was going on with the financial debacle. I mean, it was almost as if they were looking at the United States saying, you know what, all the problems are really stemming from subprime mortgages in the United States. We don't really have to worry. In fact, trying to keep rates low, not something we want to do because we would rather worry about inflation. Right. Is this something that they missed?
Well, it's easy to miss these things because they're behavioral based. That is to say, if people are willing to continue to roll over the debt of a country, there is no problem until they wake up one day and there is a problem. And I think at some point they said, you know what, these debt levels are quite high, the growth prospects are not good, deleveraging has to take place, and then they changed their view.
All right, so from an investor perspective, though, do you go long the U.S. dollar versus the euro versus other currencies?
Yes, I think the dollar was set to rally anyway. There were signs before the Greek issue became an issue that it was ready to rally. The story had been overdone, and a lot of people were short the dollar for the wrong reasons, and the technical position got kind of crowded. Greece, in unraveling the way it has added fuel to that fire.
What do you talk about when you mean wrong reasons for shorting the U.S. dollar? What were some of those?
Well, I think a lot
reasons?
of the people were shorting the dollar because they said the U.S. is bad. They have a bad economic situation. They have financial mess. Budget deficit is ugly, et cetera, et cetera. But really, if you look back over the past 8 years or so, the dollar's been depreciating since really 2002. Even over the period where we were growing robustly, 2004, 2007, the dollar was still declining. So it's really not so much about the dollar being bad, even though that was the story that was propagated. And of course, these stories to some degree can be
self-fulfilling. So is it like more of a long-term trend because of other countries becoming wealthier versus the U.S.?
Essentially, it's really a large function of emerging market economies and their paradigm shift. Now these people in these economies can trust their own currencies much more than they used to, and they no longer have to rely on the dollar for their savings and their transactions.
How much further is the euro going to slide in your thought? It's
impossible to say. I think currencies are a relative price. When you're buying one currency, automatically you're selling another, and there's no tangible value to a currency. So they're really susceptible to stories and things along those lines. To pin a value on it and say this is where you should buy or sell can be kind of tricky. But the dynamic suggests that this could go on for a little while longer.
And do people then flow into the U.S. dollar and gold, for example, or is it just the U.S. dollar and maybe buy treasuries?
I think it depends on how bad it gets and how this plays out. But I think the U.S. dollar will benefit in either event. If things get nasty and there's systemic implications to what happens in the Euroland, which is possible, then you want to buy treasuries as well.
Do the political heads roll in Europe when something like this happens? I mean, we've certainly seen a big change in all of the boardrooms of of major U.S. banks as a result of the subprime debacle. Does something start happening in places like Greece? Do we start to find people, or at least institutions, and say, gee, maybe you shouldn't have taken out those loans, or you shouldn't have loaned all that money?
Yes, there most likely will be some of that. Now, mind you, we have a new government in Greece. It hasn't been in for long. But the history of these crises, and I've seen many of them in a lot of different countries, suggests that it's not this government that's going to solve them. It will be the government afterwards or the government afterwards. This is going to be a protracted process. Greece has a high level of debt. It's virtually impossible that they can grow their way out of it. And the Greek people already are protesting. They're not happy with the reforms.